Hello, this is Patrick White from AA Commodities and Investments of Spencer, Iowa, with your Sunday evening market recap here. As you can see here, we've got a little firmer open, and December corn is up 2 1/4 cents at 387 1/4. November soybeans opened up here. We're up 3 1/4 cents at 919 1/2, and December Chicago wheat is up 2 3/4 cents at 493 1/4. So I'm going to go ahead and get it started off here with a disclaimer. Just remember that everything I'm talking about is just my opinion and that there's no direct trade recommendations. If you'd like to read the full disclaimer, please pause the video now. All right, so as you can see here, we had a little bit of a firmer open here on the overnight, and I believe that's because of this. We've got a really, really cold 6 to 10 day forecast coming in here, and if you look out for the 10-day forecast here for the weather, for Spencer, Iowa, where I'm at here, we're supposed to have a freeze on Friday, October the 11th. So overnight low dipping down to 30 degrees. We'll see if that comes to fruition, but I'm guessing it's going to be a pretty decent sized freeze for most of the Corn Belt, and I think that's why we're a little bit firmer here on the open. In addition, this week we've got a pretty sizable WASDE report. We're getting an update on yield and harvested acres, as well as the United States-China trade meeting here is coming up this week as well. So kind of a busy week, going to be a lot of news bites coming out here, and I think certainly the driver on the overnight here is driving what's driving this market on the overnight here is just the colder weather and the optimism over the China trade deal. So with that being said here, obviously we're firmer on the overnight, and we'll jump into the charts. On Friday we had a little bit of a down day in the corn market, but really we were able to we did close below that 385 level. But we gapped up above here, on Sunday night. So obviously this 385 level is holding here into play. Obviously on Friday the market was disappointed by the ethanol announcement by the EPA. Saying that we're going to blend a minimum of 15 billion gallons, and maybe more than that. But we'll see how much more they want to do. There's no specifics on the deal yet, and I doubt they even know what the specifics are. So we'll see what happens. But that could be some further good news down the road to look at, but the market was disappointed from it on Friday. Obviously, 385 has been our support zone. I think if we drop that, we'll probably head down to this 381 region, and we saw the market test off of those two highs there at the 381 zone in August. So I think that 385 to 381 is your support level. Obviously, 393 has been good solid resistance. And I think if we break above there, there's going to be some good solid psychological resistance up at $4, and then up at the 401 3/4 200 period moving average. So a couple areas to keep in mind there. Soybeans here, obviously we had a pretty firm open here to start the week. Kind of went up and tested that 920 level, and we tested it again there on Friday and failed off of that, and we're testing it again here on the overnight. So if we do break this 920 region, I would expect us to go up above to this 932 area. I know I don't have a horizontal line there, but we did see the market push up there twice. So that 932, 934 area in November beans is a pretty significant area. With that being said, though, we did have a nice breakout of this downward trending line, and the market is certainly, we've completed this bull flag, and if we get this breakout, we'll be extending onto that. So we'll see if we can get up to this 932. Other than that, probably 941, 941 and a half would be my second area for sellers to come in. So going into December Chicago wheat here, kind of looks a little bit like the corn and soybean charts. We had this nice push down into the 490 resistance or support area, 490 region, 488, 490, and the market's just pushing back up. They're probably going to go up and test the 498 to $5 level again. If we break above there, we're probably looking at something more like 510, I'd say. But right now, we just haven't. The wheat market really doesn't have a huge story behind it besides Minneapolis wheat. So just kind of cautiously optimistic on the wheat market here as far as Chicago goes. Minneapolis is, we had a pretty good sized sell-off here on, the better perceived weather here last week, but obviously that weather forecast has been a little bit worse here going forward. So, we've seen them test this 530 level and regain that. So I think, 545 is probably going to be resistance. If we break above that, they're probably going to challenge this old high here at 555. But, if you see this thing sell off, you're not going to want to be long if you see a close below this 527, 525 region. So, all right, going into the cotton market here. Sort of to finish off last week, we had a little bit of a higher close here on Friday. We were up about 7 cents. Had a nice push up there on Thursday, and cotton traders are really keeping this thing supported. Just on the perceived optimism over the China trade news, and in addition, just the perceived supply. There's less of a supply here for cotton as we go into the October stocks report. So we'll see what happens with supply and demand. But certainly the market is trying to price in a bullish report there, and they're also trying to price in some optimism for the Chinese trade deal. So that's obviously huge deals for cotton this week, just like soybeans and corn and wheat for that matter as well. So going into livestock here, I'll just touch on it real briefly. I'll talk about the hog market first. This week, this last week we really saw this push up to this downtrend line, and we saw the market fall off from there. We're kind of back into our base level of support here from this last range. This down here at 66 to 66 and a half, sort of where all these highs were. They tested this area probably about a half a dozen, 7 times or so. The market's going back in there to test that region. As you can see here, when we tested it on September 20th, the market did a nice job of rallying from there. So we'll see if we can get a positive start to the week here after we went down and tested this low 66 region. If we do get a bearish start to the week, I expect us to go back inside of this range between basically 66 and call it 59.50. So, and going into the final chart here, and albeit the most bullish chart here that I've got, December cattle. Really the market's done a really good job of pushing back up here, and we've closed in this gap from the Tyson fire. So the market really had the kind of the Armageddon sell-off there, and we realized that wasn't quite the big demand shock to the market. So we've seen good demand by the packers, and beef prices, although they have been falling, overall they've been good and they've been supporting this market. So with that being said, these guys are still making money. The packers are still making money here. So it's nice to see this relief rally after we saw this large sell-off. So I think this 111.70 area is 111.70 is my resistance area in December live cattle, and then up there, up at the 112.98 area, 113 area. So those are my two resistance areas. If we do see a sell-off, we'll probably support down at these low 109 regions. We tested that a couple of times. If you're long, I guess I would think that the uptrend would stay intact here until, probably the 108 region, 107.80. So you really don't want to see a close below there, and especially not a close below 106. So that's about all I got. If you guys have any questions, feel free to give me a call at 712-262-7606 or visit us at aa-commodities.com. And thanks for watching. Appreciate it.